everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for July 26th. Well, the dollar is generally a bit weaker at midday in Europe, with no particular news moving it. The New Zealand dollar, the Kiwi, made the biggest gains, despite the announcement of a smaller than expected trade surplus in June. I think it's probably because exports rose more than expected. As for today's U.S. indicators, the Markit Service Sector PMI is expected to show a small increase. Now, coming after last week's greater than expected rise in the market manufacturing PMI, that could increase confidence in the U.S. economy and increase the chances that the FOMC will improve its view on the economy this week. That would be positive for the dollar. On the other hand, a surprise decline in the index might be discounted somewhat, given the divergence that you can see between the market measure and the more widely watched ISM non-manufacturing index. A few minutes later, the Conference Board Consumer Confidence Index is expected to decline somewhat, presumably as a result of the Brexit problems. I'm not so sure so many Americans are concerned about Brexit, but I think U.S. consumer confidence may fall further as Republicans consider the disturbing picture of the U.S. that their party is painting, and the Democrats consider the possibility of a Trump presidency. On the other hand, U.S. new home sales, which come out at the same time, are expected to improve following last month's sharp decline. Plus, the Richmond Fed Index, which comes out then too, is also expected to do a little better, although remaining in negative territory. Now, those two indices, the new home sales and Richmond Fed, may outweigh the negative impact of consumer confidence and push the dollar higher. Overnight, Australia comes out with its many versions of the CPI. When the Q1 data came out back in April, the surprise quarter-on-quarter fall in prices helped to fuel expectations of a rate cut and sent Aussie dollar crashing. The picture is somewhat mixed this time in that the quarter-on-quarter data is expected to show a rebound in inflation from the first quarter's exceptionally low level, but the year-on-year data is expected to show a continued slowdown in inflation. Now, I expect that this time the continued deceleration in the year-on-year pace of growth will take precedence, and that once again the inflation news will be negative for the Australian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.